Wow, hiya, I'm Rocky Outcrop. This is Bitcoin Technical Analysis, diving straight on into the charts. You can see that we have a shift pitchfork on the go here. By the way, these lines here were giving us kind of an idea of what they were pointing to. I should really just move them over. So you have the upper warning line out over there at the top. You have your upper line here. I'll just put the arrow in for this one. And you have your median line here, which is red on this particular pitchfork. Right, okie dokie, cool, nice one. So what we're looking at here is whether or not we'll be able to, is actually, no, this has defined the price action for us very, very well since we actually put it on here. Handy. You can do this at home yourself, of course. I hope you find the confidence in watching these episodes to be able to do that and conduct this own research yourself. And what have we seen happen? Well, today's price action has actually seen us coming down towards that median line and coming up quite close as well towards the upper line there, failing to get beyond that and move up towards the upper warning line. Now, warning would be, of course, very good for all the lunatics out there. I'll get onto the word lunatic in a moment. And that if we were to actually cross past the upper line. And of course, the median line there is where we found a support at recently. I haven't actually as well come down and touched the 21 EMA during yesterday's price action. If we were to move on down below this, then, well, it could be a prelude to us going down towards the 21 EMA. And if it did happen, then that could preclude us moving back up above this upper line in a hurry. What do I mean by preclude, by the way? A lot of people out there might not know what the word preclude means. If I just open up this tab, you can see here, preclude, including that C there, is prevents something from happening, making possible. Here's an example. His difficulties preclude him from leading a normal life. Hello, Rocky Outcropticians. Because perhaps we are all lunatics. And of course, the reason I'm bringing up that word is because because it's a fun word, right? Obviously, it comes from origin, looking here, Luna for the moon. So people who believed in the moon, causing intermittent insanity were lunatics. But I'm going to talk about it instead for the purposes of this episode and say that people who think that, I think we would all become a little bit lunatical. What would the word be for that? Lunacy would ensue if we were to move up beyond that sort of 12,150 area where we have the upper warning line at. So there's a warning for all the lunatics out there. If we want to go visit the moon in our spaceships, that's where we'd have to go to. Movements down below this line here, and of course the warning line down below at 10,500 would also be a very big warning to all the lunatics out there, because of course that could definitely preclude us moving up towards this warning line at the top end if we were to go down there and touch it. So there's a few reasons for why we'll be looking at that for that, and we'll look at those reasons in a moment or two as we do the price action. But I'm going to just kind of continue on with this brief summary of where we've been from, where we come from, where we're going. Now, today's price action has seen us coming in with what's so far currently kind of looking a bit doji-esque, with the highs having come in at that blue serrated line precisely. How lovely that is. In fact, looking over towards the left, you can see how it touched it here. It was supported in terms of the body closing there a few times, and we've had the bodies here. That this blue line of great interest to us. And when did this blue line make its way onto the charts? Well, many moons ago. I'm pretty 99% sure I didn't draw that in even in 2020. How cool is that? Handy. Well, we actually see the blue straight line there is still actually operating in terms of our upper side resistance. Of course, movements above that could be a prelude to moving up towards 11,700, which indeed itself could be a prelude towards moving up towards that upper warning line at 12,150 area. And that may preclude, in terms of people looking to short this thing, movements in the immediate future down the way again, depending on, of course, how we handle this. Like I was saying, then of course your lunatics towards the moon scenario, movements down below this area could preclude movements up above the way, prevent from happening. And that's why I'm looking at the 21 EMA for at the moment. Indeed, going down towards this area, I'd say might be much more likely to go down and test this 10,500 area than we would be to immediately fling ourselves back up towards the top end. Of course, this is us kind of broadly scattering out the ideas about where the prices could go over the next wee while. In the immediate say of things. I'm looking really between 11,500 and 11,600 in terms of the price if you're looking on a very, very low term time frame, in order to then capitalize on these movements beyond either of these areas, with this upward sloping trend line that we have on here actually having operated in terms of support for us kind of today, yesterday, the day before. So far, let's see if this movements beyond this and closes below this line could then preclude movements towards the top line and be a prelude down towards movements down below. Okay, enough with the word fun. Why am I talking with a bunch of word fun, by the way? And why are we talking about these things in such kind of, in such maybe perhaps what could be seen as being flippant terms, and why are we talking about it in such a way? What's got me thinking along these lines? And I just thought I would point out a couple of the old books to folk. I have this book over here, which is, of course, talking about lunatics. Not neural networks. Where am I? What page number is this? 226. I've gone way past it. Give me a second. I have to get down to page 179, 170. Yeah. Lunar and Solar Rhythms. So, the Encyclopedia of Trading Strategies by Jeffrey Owen Katz, PhD, and Donna L. McCormack. Note, they quote themselves during their stuff here. Where is it that they're quoting themselves at on this one? In a previous study, Katz and McCormack, June 1997, we found that lunar cycles. Well, I have to give them the honesty of putting the word we in there. Whenever I quoted myself during my dissertation at university, I didn't actually put the word we in. I just said, however, that's a total aside, but I just thought it was funny. That I always find it funny in academic articles when people quote themselves, okay? This is why I did it in my own dissertation, which you're not supposed to do, but it was a good crack, worth it for the laughing stacks. Anyway, the lunar and solar rhythms, obviously I don't think that means anything, but I just thought I would read about it, you know? I don't think that, I mean, of course, people who study the CMEs, particularly the charts that are drawn up by cosmologists, as we talk about the coronal mass ejection charts, will maybe perhaps find this a particular interest, you know, whenever we're looking at things like, of course, you know, the things like, you know, what star sign that you were born under, for instance, and stuff like that. Imagine that for technical analysis. Anyway, this is a serious book. There is a conclusion on this one. They've got loads of code in here as well. So I think this is C. I'm not too sure. Looking at that, trying to recognize it. Of course, there could be anything, but it looks like it could be C that they've written that in. And where's their conclusion on this pattern, on this chapter? I just want to get to the conclusion. When they're, entry models based on lunar rhythms do not do as well as those based on seasonal rhythms. The poor showing of the lunar effect contradicts our earlier study. The differences may stem from two possible factors. I'm going to posit a third one here. Entry models and exits. Okay, and lunacy, right? Yeah, like they said themselves. Anyway, of course, it's crazy thinking like that. But I'm going to enjoy reading this book myself. I mean, and all the rest of it. I could, if I wanted to use the code that they've put in here to sort of do stuff. I could even sanity check it. No doubt there's an error in here. There's always errors in code. It's always funny to see that in textbooks. But I'm not going to bother, probably, because, you know, this is all computer age stuff. And what I'm actually really interested in today's episode, really, that I wanted to point out, is this pre-computer era things here. So I was going to show you this other book that I have open. Yes, what I wanted to show you was this book here, New Concepts in Technical Trading Systems. And it's got that 70s feel to it, you know, it really, really has. Well, does it have a publication date on here? Just really easy, I can show people. Where's the copyright jazz? 1978 by J. Wells Wilder. Well, who is that person, J. Wells Wilder? Who was J. Willis Wilderger? And why have you not heard of him before? Well, a lot of you will have heard of him. But J. Willis Wilderger was the guy who came up with the RSI and indeed this DMI indicator here. Interesting. Of course, concepts like stochastics and stuff like that, including the word stochastic, comes from back in the age of the ancient days of Greece. But and you know, other concepts throughout time have had people invented them at different times, but it's just interesting that those particular ones were invented before, you know, for instance, the RSI and the DMI, which are, you know, worked out using fairly, not complicated is the wrong word, maths, but, you know, it's, it'd be annoying having to do all the calculations, right? Or by hand or whatever. in that pre-computer era of 1978. And I thought I would show you a couple of snippets out of this book then, because I was asked to talk about the RSI by somebody, and I mean to do that at some point, but I haven't done it yet in the Discord. I never got back to him properly. Sorry about that, by the way, buddy. Sorry that. But and also I was asked by somebody else in Discord to do an episode explaining the DMI. So these are a couple of things that will maybe make it into my course or whatever that I come up with at some point. And I'm not going to actually spend too long doing it today, but this is the book that it came from. A couple of things that I thought would be of interest to be able to point out is this idea of how did the author of the system determine 30% to be the absolute best distance to use, right? Just as this may not appeal to everybody, but people want to know, why when you're looking at these oscillators, are you going to say that things are oversold or overbought at these particular levels? Like why would 30 be of an interest? And why particular one? Why that particular one? And he actually gives you an answer for it in here, but it's forgotten about by most people. Most people don't talk about these things. Essentially, that that in and around this area was where you were getting the best results on it. Anywhere between, in his opinion, at this time when he did the math, 28% and 32% were around those best areas where you're going to get consistent results. And it's not going to make a big difference if you use 28 or 32, really, compared to 30. It's all more or less the same at that point. But it's whenever you use 20 or 40%, you might see a drastic reduction in your profit using those as trading systems. Okay, so that's why it's just kind of, it's been looked at, thought of, and it's a best fit, which is why I felt like it was fine for me to change this to 35. Now I know that goes on beyond the area of the 32 that we're talking about, but in terms of crypto, why I have this set up at 35 and the bottom end down here at 20 instead of using sort of the bearish control zone as defined by McCormack in these books. This book here, I believe in this book here. I believe it's in this book here that they talk about the oscillations in the market and where to look between for certain zones and all the rest of it. Why? Yeah, and why I feel fit to change them, because it's like it's the best fit thing, and it's just where he did it. And me changing it to these numbers is suits me better in terms of how I'm looking at this just now. And of course, I reserve the right to change it to whatever I can feel like, as all of you should as well. Don't be constrained by anything. Right, so on with the show. Okay, so I wanted to show you some of this book and how hard it is coming up with these things. So this guy was talking about, this guy is come up with a lot of stuff that you actually maybe should be given more credit for, and that as well. So a lot of people that have been featured on the show so far include alive people such as Bollinger. I think that I don't know if this guy's alive or not, but anyway, like people with Twitter accounts by it. That's what I meant by alive. Bollinger, who did the Bollinger Bands, whatever. You've got Peter Brandt, who did the whole being old and has been a trader and talks on Twitter. So so people talk about him, and he's great, by the way. All the people that are featured are Bulkowski, with his pattern site and the book that he did, the encyclopedia patterns. The other people are the ones that Bulkowski stood on a lot of giants' shoulders making that book. So the people who he kind of talked about have featured as well, such as the just waving a friend there, such as the guy William O'Neill, who did the cup with handle and stuff like that, various other ones. Other people who came up with other ideas. I'm trying to think of the names of all these different people, such as Gartley and all the rest of it. Now, whereas this guy hasn't had a look in yet. So here we are taking a look at who he is. And well, who is he? He's a guy that came up with these different ideas, such as the RSI, the ADX, very, very, very good thing like called True Range, and one of these other things that he talked about as well in terms, which is called stop and resistance, or stop and reversal points. And you'll hear people talking about stops and reversals. A lot of people get these terminologies wrong, or they kind of misuse them, or they abuse them to fit their own needs. And we all do that. That's cool. I don't mind. It's just if you hear me talking about a stop and reversal point, It may well be that I'm talking about it conceptually along the same sort of lines of what he was maybe talking about in terms of, just where the prices could go to, and at which point you'd be wise to have stopped out and perhaps be considering to reverse your trading or whatever. But I don't particularly use the phrase all that often on the show here to talk to people. But look at this book, and these things would have had to have been all worked out by hand using your wee bits of paper. I remember this paper used to exist, by the way, back when I was at school. Maybe it still does as well, for doing all your charts on. Is that what it's like when you're at maths these days? God, I'm so glad to not be in school anymore. God, there. That's why it's important to do well in your exams, kiddos. You're working out numbers here by writing them all down. This is just wanted to introduce people to the idea of how lucky we are to have the computers to do all of this for us. So anyway, when I eventually make it down to looking at the other things that he has on the go here, like the RSI and the ADX, you can see how how strenuous it would be to calculate this, and then maybe perhaps how you would take it less for granted. This is the ADX that we're looking at here with the DM. The DI positive and negative, the DI negative all the way up there at that one, DI positive down here in this one, then they cross over here. And if you've done all this maths yourself and worked it out using hand drawn on the charts and your charts here yourself, putting the wee circle in and getting your ruler out and, linking it up. And then the next day comes along and you do that. And the next day it's like opening up an advent calendar, all this hard work you had to do yourself all the way back. Then maybe you'd respect it a little bit more. And maybe it was worth then just kind of spending a few minutes in this episode here to point out the respect then that you maybe is lacking when you take things for granted that are just generated by the computer for us so easily. Over here you can see that whenever the DM positive crossed over the DM negative towards the top side, and at the time the ADX line, which is in the background there, it's faint, it's red, you can see it's pointed out, was above 20, and you can see that the prices rose towards the top side there here on, what is this, wheat? I think this is wheat, 1978 wheat. Chicago wheat. Yeah, give me some of that Chicago wheat for my Chicago pizza. And yeah, so that's cool, right? Is that cool? How did we see that? How do we see that affecting us in terms of the charting for us, in terms of Bitcoin, for instance, right? So looking over here and seeing that we had this big old rise up here, dig up make this a bit bigger, and you can see here that we've had this big old rise up whenever the yellow, which is positive for me, crossed over the pink. Now, of course, the ADX line at that point was very shallow there, below 20, not very shallow, just below 20. Having had this consolidation period where we weren't really trending strongly in either direction, as we had been for, on the way up to there, but we hadn't been for a month or two, 3 months actually, I suppose. And then, we crossed towards the top side, and this was a decent entry, freaking glorious entry, had you actually just traded off the back of the cross there. So thanks for that, Wilderger. What's your name again? The books in the 1970s not put the author's name on the top of them. His name is Wilderger. Joel is Wilderger. So thanks for that, Joel is Wilderger. And yeah, so then that went up. Then whenever the ADX moved above 20, you could see that it was really strongly trending towards the top side. And indeed, had you kind of just traded off the back of this and thought to yourself, well, hey, I'll wait and I'll get in on a sort of dip whenever the 20 moves above, or the ADX moves above 20, you'd have been doing it there at that point at the mid 9,000s area to long it up towards the top. So these things are all very, very good. Some other time I'll explain all these things and how they work. And indeed, if you want to get your hands on on my particular setup for them, just go and hit that button for indicators, type in the word Rocky, and you'll see that there's a few of mine on there already. You can add them to your own charts as you will, if you will. Anyway, the technical analysis really boils down to what we've been looking at for the last wee while. And with bearing in mind then, where are we here? This is kind of come up quite high, and we're above the positive and negative directional movement lines here, the DM positive, the yellow, and the DM negative. Or indeed, if you want to do it the way that Joel is Wilderger spoke about it, you'd call them the negative DM or the positive DM. I prefer saying it the other way around because I'm a 21st century kid or something, whatever. I'm not though. I was talking about people in the Discord the other day about whether or not I'm a millennial. Turns out I'm a millennial. So hilarious. Yeah, if this is curving towards the downside now, the ADX, it's kind of, and that has been the case for a while. If we see these crossing towards the negative side, then maybe, that would be quite negative. And that's what I've spent all this time building up to get background to saying that if we saw movements down towards this area, it could preclude movements towards the top end if we see these also cross over. Of course, the way that these are worked out are to do with, I'm not going to go into explain it. I said it wasn't going to in this episode. Just look out for that. And as well, if we see that we've seen this coming back down below 40, this isn't something that Joella's Jur talked about too much in his book, but is a line that I look out for, which is why I've coloured it in blue and made my own custom one, DMI with these lines in the background, just to give me a bit more concept when I'm looking at it. Bearing in mind, by the way, that these lines in the background here are helpful, and they really are helpful. But if you sort of do it out of the box, all you really have are the lines and the numbers over to the or the DM positive, negative, the ADX, and the numbers over to the side, and you kind of have to look at it with your own eyeballs. Whereas if you were drawing this in by hand and you were doing this yourself, give me an example real quick, will you? Here. Then you've got lines in the background, right? Okay, do you see why it's interesting that as well? If you were doing this all yourself, then it's quite obvious to you. If you don't, then so feel free to add lines to your indicators if you want to as well. I could go on and wax on about how amazing our trading has been, by the way, recently, if I wanted to, but I'm not going to do too much of that. Instead, I'm just going to point out the fact that we've sustained the prices above the 11,450-ish area of the 236 Fibonacci retracement line there. And while we're below the 11,580 price point at the moment, that staying above this downward sloping trend line here or upward sloping is, in fact, very positive for the price in terms of, not doing something crazy and having some of that downward lunacy. What would we call it for the opposite of a lunatic? Then would be somebody who's abysmal, I suppose, who's looking down into that abyss, right? So go from lunacy to abysmalism towards the downside here. If we did see movements down below this golden pocket zone, we're activating, so to speak, the 236 on this Fibonacci retracement. Bad times ahead if that's the case, okay? But we're way ahead of the crowd in terms of this. Pretty sure everybody else is still talking about how we're going to 20k in about a day or two. And sure, if we do that, fan-dabby-dozy, because we'll be well prepared for it because we're already looking at everything we need to know about. There's various other things that I wanted to talk about in today's episode. Clearly don't have the time after everything that I've been talking about, but there were things I wanted to talk about. There were things. So we came up here and we put in this high here on the charts, and it was not divergent compared to the previous highs over here. As you can see, it was on the DMI. There's a fantastic indicator here, but it wasn't on the other ones, okay? I mean, even if the word, by the way, a lot of people don't even use the word indicator to talk about these things. They're oscillators, indicators, or blah, blah, blah. I don't give two Fs, by the way. I don't give a and so I don't care. Get the words right or wrong. I don't care. As long as we know what we're talking about, that's fine. And I don't think that the taxonomy is very, very good anyway. I would dispute almost all of it, almost all the time. So I don't care. But what else I want to talk about then, of course, I was building up to saying there now is that the subsequent high came in bearishly divergent. So this high that was coming here, 11,919, was of course bearishly divergent across the board. And we've seen prices kind of, suffer in terms of their upward movement since. And what we're looking to see here then, if we have something like a failure swing pattern, don't want to say the word pattern even there as well out of context after having spoken about language. I want to see one of these swing failures or whatever on the RSI and everything else as well as we're looking at all this. If we see the prices come down towards the neutral line, then sure, that's going to be of interest for us. If while we're at it, why don't we go over to the horse's mouth and check in with the momentum concept, because this is the man that came up with it all as well. Suppose that pork bellies, blah, 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 talking about momentum. Let's see, where's the bits that I would want to point out on this show? Excuse me if I talk slowly. By the way, Joella's Wilder Jur talked a lot about stops, always talks about stops, talks about trading systems as always involving, like where you would get out and everything else. It's always a good idea to look at that, and targets, of course, which is something that kind of goes by the wayside these days. And people are talking about things as if, you got to be amazing all the time. You got to be amazing. That means that you got to let your winners run. You got to do that, whatever. You get targets, you get stops, you do all that. You're going to be doing better consistently across a longer time. Of course, it makes you more consistent because you've got things defined in advance. Let me see, though. I want to see RSI in action here on this man's tops. Tops and bottoms are indicated when it goes above 70 or drops below 30. Just wanted to make a comparison here. I have this in here at 80, and I have the bottom in here at 20. I've extremized it a little bit out here for the old crypto land, so there's a little bit of a difference for you. And that I don't really particularly feel the need to explain these things, but here we are looking at it. Chart formations often show up graphically on the RSI, may not be apparent on the bar chart. So, you're talking about like head and shoulders, stuff like that. We talk about all the time. Failure swings above 70 or below 30 on the RSI scale are strong indications of market reversals. So it's a slightly different concept to just simply being overbought or oversold. Failure swing would come in around about these types of times here. Now, I'm not talking about when it was above 70 necessarily, but if you were to look at it about 70, then what you would say here is that we had a failure swing on this high here as we came up and actually didn't manage to achieve prices above 70 after having been up above it beforehand and then putting in a further high at the top. You could kind of just narrow that down and say that was simply bearish divergence, but actually this is called a failure swing pattern in the old book by your man Joella's Wilder-Jur. Support and resistance often show up clearly on the RSI before becoming apparent on the bar chart. So again, looking at our chart and saying that we have, if we see these supports and resistance, which are actually really quite clear, we've made it clear. We did the hard work ourselves. For instance, many moons ago when I had that blue straight line in that, but also the Fibonacci's, the pitchfork, everything that we've done here, with our smashing stellar, oh my goodness, is this the best YouTube crypto technical analysis channel that has ever existed? Answer, spoiler alert, yes. But as we're doing all this, then we have them on here. Okay, that's cool. And price action, I think actually probably, to be honest, is kind of should be the first thing you look to. And then afterwards at these things, there are people out there in the world who kind of just do this sort of a thing and say, we might have a good entry here, and then afterwards check out how things are going on. We kind of do it the other way around, as you'll have noticed. I think that's probably the better way to do it. Of course, these are all opinions of mine. And yeah, so what was I wanting to get at there? Lost my train of thought here. Failure swings. Support and resistance often show up beforehand. And what we're looking at here as well, of course, is going to be, the standard support and resistance of this neutral line here in and of itself. But you can do certain things, like you can see here that we have this line here in terms of being resistance for us now, right? Okay. And that may represent various different prices actually on the price chart itself. But in terms of the movements here, and that, then this could be seen to be that resistance. So movements above that 72 area could be quite good. But indeed as well, actually, just this bullish control zone as well is another one of these where we've had this inflection in and around these zones here as we've poking up above it and everything else. And you can see then we came down here and belly flopped it and moved up again. This is another one of them, should we move past that one towards the lower side and upper side. And of course, in terms of the lower side here in supports and resistance, we can quite easily just say, let's take that and that. This low here, these two here, and this high, we came up and down above it there, again here, and then in here at this bit, and this point here, yada, yada, yada. So you can see an awful lot as I drew it along there, and we can look between these two lines. And of course, movements down below that 56 towards this neutral line could be seen as kind of further on breaking down the way. And we might have to have an early check-in with whether or not we've got a bearish trend on the go at that point. Okay, we might have to. And maybe we know the ADX will maybe stay above 20. And if these things cross over, move extraordinarily, all those things could happen. Anyway, while on the one hand, I may be speaking too quickly. On another hand, maybe I'm being a bit too esoteric. And on another hand, maybe I'm not explaining myself fully. On the other hand, maybe I'm overly explaining things somewhat. I still think that at the end of the day, this boils down to being the best technical analysis on YouTube, right? I know, big-headed. But if you want to hit that subscribe button, I'm pretty sure you'll get some value. I'm pretty sure you will. If you want to be like one of the other amazing people who've hit the other button, then you'd be more than welcome to. By the way, let me just dive on over here and show you and give somebody a shout out, because somebody deserves one, and that is Tony Lawson 22222222, who has joined as a member on the chart. And so well done. Cheers, Tony. You are a legend. So shout out, well deserved. That's one of the benefits you get for doing that as a member. I'm going to give you a shout out in every video today. Do I need to go on? Do I need to go on? Do I need to? Am I giving away too much of myself here in this episode with this amazing technical analysis? I think I maybe am. So I'm going to leave off there. But this episode would be nothing at all without at least a small actually, I've only sat on the 24-hour time frame, hardly looked at very much at all, but I've given off an awful lot of value. I think you can carry these concepts that I've spoken about here on the 24-hour time frame while conducting your own technical analysis across the board, looking at various different things, whether it is indeed the 21 EMA, where that shows up on different time frames, how these things are going, the divergences, the support resistance, the breakout levels for them, the positions of these things. There's so much that I've talked about that you could just kind of apply yourself, whether you want to draw patterns or anything, so much. But this episode would be nothing without at least checking in briefly with my diet, because I know that subscribers, long-term subscribers, of course, if you're not a subscriber and I'm taking up your time, then I'm sorry, but you can tune out now because I'm done with the technical analysis. But I wanted to kind of give people a wee shout out because, of course, I had a barbecue last week, and people know that I'm a flexitarian with my diet, that I've got massive respect for vegans and everything else, but I still have the terrible misfortune of being a meat eater, and I had a barbecue the other day, and that was great. But I actually am a really big fan of moving away from meat products and things like that. So I'm always on the hunt for them. And I had a vegan breakfast this morning, but I suppose, spoiler alert, I should have shown you this picture first, so that you could see it, but I just wanted to show it off to everybody on the channel. Look at this thing here. Now, this was the star of the show, this big black circle. If you're from America, you might not know what this is. That's called black pudding. Normally what it's made is, what you do is, right, you get a pig, you hang it upside down, you put a bucket beneath it, and you slit its throat, okay, and all the blood drains out of it, and then you take that and you make different types of stuff. Now, around Europe, there's loads of different ones. Spanish people have got like mortadilla, is that what they call their blood sausage? I think it is. Germans have got their own blood sausage. The UK version was called black pudding, right? And it's these circles, generally sliced up in circles and fried and eaten with breakfast meats, and it's pig blood and oats essentially mixed together, and that is great. But sometimes you get a bit kind of sick of eating so much pig blood, really, that you want to move away from the pig blood and eat something that's maybe going to be less kind of like going to kill you in the long term, eating it, even though it's a superfood and all the rest of it. So I had this, and I had this sausage here as well. And this sausage was a vegan sausage. Now, I'm a big fan of that sausage or not? Well, and not really, because it had a bit of a Cumberland type taste to it with its spices and whatnot in there. Now, I'm an Irish recipe man, and in the freezer I have got some Irish recipe Richmond vegan sausages. Extremely excited to try them out. Because eventually sometimes you get a bit tired of eating pig's trotters and eyeballs. Sometimes you're like, do I want to eat some pig's testicles smashed up with a bit of bladder and a bit of whatever else in there, or and a snout and maybe a little bit of chipped off pig bone that always seems to appear inside sausages and whatnot? Do I want that with its nostrils? Sometimes the answer is yes. And sometimes the answer is no, and I'm really looking forward to seeing those Irish Richmond ones. But I'm not too Irish recipe Richmond vegan sausages. Not too keen on this one. And then there was this square sausage. Now, I've been excited about this square sausage for quite a while. Now, in Scotland, we have a thing called a Lorne sausage. It's a square sausage, and it's actually made primarily from beef. And Simon Howie is a Scottish butcher, I think, and he's come up with this square sausage thing, and selling it. And I was interested in it because I tried Aldi's version of the square sausage vegan one before, and I thought it tasted too porky, like somebody who was perhaps a vegan had designed it. Stupid vegans, instead of getting somebody who's actually eaten one in the recent past, because they'd have told you, look, pal, your Lorne sausage doesn't taste like pork, it tastes like beef, because that's what it's made for. But they didn't, they got it wrong, and I was a bit disappointed with the flavour of this one. Slightly better, but also slightly disappointing still. Couldn't highly recommend it. Not really. In fact, this breakfast pack is something that I hope that eventually the black pudding makes its way out of, and instead of having to buy 2 Link sausages and 2 Lorne sausages, which are actually, to be honest, a bit of a letdown, you could just buy packs of the black pudding, because the black pudding is actually quite nice. Interesting side note for people who don't particularly like the nutty overtures of vegetarian haggis or vegan haggis, but are still interested in eating haggis, and but they don't want to have the lungs and all the rest of it, the sheep lungs and all that in with their haggis. Now, sometimes I do. In fact, frequently, I love haggis. But some people don't like eating sheep lungs, right? And that's understandable if you're not into sheep's lungs. And then, penises and whatever else they put in there. So, so you might not be into that. And if you're not, well, then you might like this thing called Skirly. It's a Scottish oat dish. It's really, really fantastic. I think you should look it up and make it yourself in your own kitchenette. Aye. But anyway, I made this here this morning for breakfast, and I thought it was pretty darn good. There's a black pudding. I'm trying to give you a good look at the black pudding. You can see how black pudding-esque that is. Definitely worth a munch. The sausage was pretty good. It was okay. And if you're English, you'd probably like it better than I did. Or is that unfair to say that people from England like them? And what I mean is, like, if you didn't grow up eating Irish recipe sausages, you maybe like them a bit more. And then as well, if you're English and didn't grow up eating Scottish proper Lorne sausage, then you might like this. I've had better Lorne sausage, vegan Lorne sausage in the past, and I'm still going to go on to get some more of that. So anyway, hope you enjoyed that little breakfast summary. Of course, it's got nothing to do with Bitcoin, and 99% of people have tuned out right now. But if you're still watching, then you're a lunatic, and I really appreciate it. So I'm going to catch you next time. Thanks so much for tuning in. I hope I've been of some value to you today. I just keep my head screwed on, right? Okay. Be other people saying other things out there in the world. Watch it, learn from it, enjoy it, keep my head screwed on, do my own thing. Always work hard, trust true, always paddle your own canoe. I've been Rocky Outcrop. Thanks for tuning in. I'll see you in the next episode. By the way, if you haven't hit that subscribe button and you're watching right now, then hit it, for crying out loud. Let's get to 1,500. See you next time.